Hello and welcome to Financial Intelligence. In this video, I want to talk about the pros and cons of investing in REITs versus investing directly in real estate properties. These are generally two common ways for investors who seek exposure to real estate. Either they can purchase and rent out investment properties, or they can buy shares of a real estate investment trust, or REIT for short. Each approach has its own advantages and disadvantages, and the choice very much depends on the individual investor. Many people are familiar with the concept of directly investing in real estate rental properties. However, most people have not heard of the idea of investing in REITs. A REIT is essentially a corporation that owns and manages a portfolio of income-producing real estate properties such as apartments, hotels, malls, and office buildings. REITs can also be private or public. Private REITs are not traded in major stock exchanges. Private REITs usually raise equity from accredited investors, in other words, individuals, trusts, or other entities. Whereas publicly traded REITs are registered with the SEC and are traded in major stock exchanges. Here are three advantages of directly investing in real estate properties versus three advantages of investing in REITs. If you like the type of content that I provide, subscribe to this channel and give this video a thumbs up, and also hit the notification bell so that you won't miss any of my future videos. Advantages of directly investing in real estate. Number one, higher leverage. Perhaps the biggest advantage of this approach is leverage. Investors with good credit can buy rental properties with as little as 20% down, financing the rest. Therefore, the investor's cash outlay on a $100,000 property, for example, is only $20,000. If the value of the property increases by 20% in the first year to $120,000, which is typical of the current hot real estate market, then the investor enjoys a gain of $20,000 or 100% return on investment. Although regular payments must be made on the mortgage, a real estate investor earns enough money in rental income to cover the mortgage with money left over as profit. This allows the investor to earn money from both property appreciation and rent payments from tenants. Direct property ownership benefits from the power of higher leverage up to 80%, whereas REITs are generally leveraged at or less than 50%. Higher leverage means higher potential returns because you can buy more properties with less equity. Number two, tax benefits. One benefit of investing in physical properties is the potential to generate substantial cash flow, as well as the ability to take advantage of numerous tax breaks to offset that income. Direct real estate investments offer more tax breaks than REIT investments and give investors more control over decision making. For example, you can deduct the ordinary and necessary costs to manage, conserve, and maintain the property. Another large tax break is for depreciation, in which you deduct the costs of buying and improving a property over its useful life, meaning that you can lower your taxable income in the process. Number three, less volatility. Another advantage of directly investing in real estate properties is that it has a low correlation with stocks and bonds. Therefore, direct real estate investing is a great option for individuals who are trying to limit their risk exposure to stocks and bonds. Moreover, real estate has a positive correlation with both anticipated and unanticipated inflation, and therefore provides an inflation hedge. On the other hand, the performance of REIT shares have closely tracked the overall stock market performance. For instance, in early 2011, the correlation coefficient between REITs and the stock market was extremely high, as large as 0.86. This means that publicly traded REITs tend to be in near lockstep with the market at large. Therefore, REITs are not an effective way to diversify a stock portfolio or to reduce exposure to stock market's fluctuations. We covered the advantages of directly investing in real estate properties. Now let's discuss the benefits of investing in REITs. Advantages of investing in REITs. Number 1, hands-off investing. Perhaps the biggest advantage of buying REIT shares rather than directly purchasing rental properties is simplicity. REIT investing allows for sharing in value appreciation and rental income without being involved in the hassle of actually buying, managing, and selling properties. Investors who are interested in purchasing rental properties should brace themselves for a large time commitment or be prepared to pay a professional property manager. As a direct real estate investor, you have to deal with tenant issues, maintenance emergencies, advertising vacancies, collecting rent, and dealing with delinquent tenants. Number 2, higher diversification. Diversification is another benefit of investing in REITs. Building a diversified portfolio of rental properties requires a hefty budget and a lot of time and expertise. Therefore, REITs can be appropriate for new investors with limited experience in real estate who want to diversify their portfolio without taking on a ton of risk. While most equity REITs specialize in a single type of property, some REITs provide an additional layer of diversification. To achieve this goal, these so-called diversified REITs own more than one type of commercial property, for example, office buildings and apartments. Number 3, liquidity. While rental properties are potentially lucrative investments, they can be highly illiquid, particularly when the real estate market turns soft. Therefore, one important advantage of investing in REITs is liquidity. Like stocks, you can buy and sell REIT shares on an exchange. In general, REITs trade under heavy volume, which means you can get into or out of a position when you want to or need to. I hope that you liked this video. If you have any recommendation or suggestion, add them in the comment section below. Don't forget to like this video and subscribe to this channel, and also hit the notification bell so that you won't miss any of my future videos. Thank you and take care.